Do you know what? I wasn't recording. I'm recording now. So let's get our charts back up. Alright, so now I'm recording. That's good because even though you didn't see the disclaimer, you didn't see the information that flashed up, etc., and so forth. Alright, so we're gonna focus on strategy, yeah. Today, I'm gonna focus on this Bollinger Band strategy, as opposed to going through all the charts, etc., and so forth and stuff like that, and looking at different things and so forth. So with this strategy, what we're going to do that's different is, in terms of news, obviously we want news, so it's important always to do your checks for your news, and you do that anyway. With this, what we're focusing on that's different is just this is going to get you good entries and a quick move in your direction with volatility, and that's the key thing when you're trading. So you want volatility. The importance of volatility is that it's the market moving. So let's just look at these two indicators here and what they measure. First of all, so you can get an understanding of that. Yeah. Alright, so what we've got here, the middle band that you see here is a 20 moving average. Yeah. If I do that and delete, you can see it's exactly the same. If I add it back in again, indicators moving average, 20. Change the color of that, and you can see it's exactly the same. Yeah, so that's a 20. Now 20 is used as a dynamic support and resistance by most, so that's why you would notice a 20 reacts in that way, but it reacts in price reacts to it. It goes to it, moves away from it, constantly goes to it and reacts, and you can see it how it hugs it here quite closely, and then it moves off only as it moves off. Where's my drawing tool? It moves off and then comes back to it, and that's what it does constantly. Yeah, so it moves away to come back to it and so forth. And when the markets are trending quite heavily, it will hug the outer. If it's coming down, it will hug the lower. I think you guys can see my mouse, can't you? Should be recording my mouse as well. So it hugs the outer. If it was going up, it'd hug the upper outer as well. Yeah, and what it is, it's a measure of volatility in the markets. So when you see the bands like this, rangy, you don't have much movement, you don't have much volatility. When they open up, as they do here, now you start seeing that we have volatility because the markets are pushing up. If the markets are pushing up to touch one of these levels, then of course it's going to create volatility. So that's a visual representation of volatility. Yeah. Now what we have below it is the MFI. Yeah. That's not your furniture company. MFI is money flow index. Alright, so we've not really touched on this much. Money flow index. There you go. Handwriting's not the best with this thing, but it is what it is. Now, money flow index is a measure of money flowing in and out of a particular asset. That's what it is. And we're looking for the extremes, which are like your overbought and oversold conditions. So when we're talking about oscillators, this is an oscillator. Do you recall we were using one of the other strategies, we were using the percent B Bollinger. Do you guys recall we're using this one here? If I do that. So you will see that I can use a different oscillator. If I show you the CCI, back in the day it trades for the CCI. And I was trading this with the CCI and tearing it up, which isn't as good as the money flow index. But if you look at the CCI again, you know, you can see similar movement between the two, right? Or between all three. See similar movements, yeah? You guys can see that, right? So it's just an oscillator, yeah? So the fact that it measures money going in and out, it measures overbought and oversold conditions, they typically all measure the same type of thing. If the market is overbought up here in this area, it means that the market should be selling off and vice versa, yeah? But it's not a magic anything. Nothing is magic in the markets. It is simply just trading a strategy, so you just stick to the rules that the strategy gives you. And now that's going to be a key thing, yeah? So Now, the reason why rules are important is because the emotion side of it, yeah. So it's to help you. Not it doesn't remove the emotion, but it's to help you differentiate between the two. In sense of when you have to make a decision yourself and you don't have as many things there ticking off, what can happen is you can end up making that decision quite emotionally. Now you can do it either way, right? But you can make the decision quite emotionally because now, where if you don't feel like you have enough information, you then start thinking, which you would say is logically, but there's always emotion involved in that logical thought process. Whereas if you've got rules and you follow those specifically to a T, the same way that a machine would, yeah, where a machine doesn't have the capacity to think like we do, or at least as far as we know, it doesn't. Um, as far as I know, there's no AI at the moment that still has the capacity to think like humans do in that way, and have emotions put into place with it. You see, so this should help take that away if you just stick to the rules, yeah. And that's important. You have to stick to the rules, yeah. So you don't want to say, oh, well, I could have sold this here. Um, I could have showed this here, and then you look down, right, because it moved down. You just look here and you say, look, this has shown me that I could have sold it, and if I measure it, there's what 13, 14 pip drop in that, yeah. Because and here's a danger. The danger is you could do it and it could work and you could make money and you think it's okay. Sometimes making money isn't a good thing in the markets. It's not a good thing if you've done something that's wrong or you've broken your rules or gone against them. You have to stick to them. It's really key and important. So, rules for entry. Okay, this is important that we have rules for entry, just like we have rules for exit. Okay, but you guys have the money management rule that I've given you for this, yeah? So, rules for entry are going to be when you're looking for a buy, the price must come down and hit the lower Bollinger. It must hit it. Now, this is not the standard Bollinger setting that you normally have. So you're going to miss out on some opportunities because of it. If I give you the standard Bollinger setting so you can see, um, yeah, the standard looks like this. So let's just change the color. Yeah, so you see the standard one is closer, yeah? So you'd get many more signals on the standard one, yeah? The reason why we're not using the standard one and we're using a 2.5 deviation on this is because, and some of you might have seen this in another video that I did, as an analogy is the bow and arrow, yeah, right? So as we pull back, the further back we pull, the faster this is going to push forward, yeah. The more explosion it has in the move, right? I know you've heard this, Roger, but it still is the same thing, yeah. So as it has to push up higher, it gives us a bigger push back to the downside. Okay, so market comes up, it hits the band, and as it pushes back, you got a 14 pip move. If you're only looking for 10 pips, all we're looking for is 10 pips, yeah. Then in that instance, you're covered, right? You're good. And obviously, we know how to deal with it when it breaks out because the bands are used in two ways, right? The bands are used, number one, for mean reversion, price reverting back to the mean, yeah. And the other way that it's used is for breakouts. Market breaks out and keeps going. Yeah, so it's used in one or two ways. Typically, shorter term time frame, trading the pullbacks, trading back to the average. Typically, in the higher time frames, the market is breaking out, but it can break out in either time frame anyway. Yeah, that's why it's important that you wait for it to push up and hit. So it hits here. Can you get in? Well, we need to make sure that everything is lined up. So at that point, then no, you can't get in. So do you see? You don't have a signal here on the lower indicator. So even though the move was correct and it would have made you money, you need to wait for your entry. So we get the entry here on the second one, yeah? Do we get a touch? Yes. You can see that, yeah? If there's anything that you can't see, anything you're not sure of, etc., obviously by all means let me know, put it in the chat. Um, so I'll answer it. Right? I want to get all your questions answered as well, especially while we're recording, yeah? So if we do that, if we do that as well, and then we do that and that. So this, now that we marked here, as you can see, there's another one here, isn't there? Right. So we mark this one as well, and I'll switch between the time frames and see if there's a trade setting up. But now, right, now here, if you have a look here, this is your 6:30 on here, so that's really 4:30 a.m. So you're not trading there. 8 o'clock, so 8 o'clock you would trade, right? Because that's 6 a.m. Right. So what happens is you've got here, you've got your signal, you've got your entry here as well. Bang, you take the trade. Market runs, and you've got your 20 pips to the downside. So you're safe in that trade. Do you see what I mean? Where it runs that 20 pips against you, you're safe in that trade, right? Because it's moved. You see, that's the important thing. We know in the morning we get volatility. That's why we say trade at 6 a.m. The reason why we trade London Open is because we get the break, we get volatility, we get movement, we get money coming into the market. You can't trade where there's no money in the market, right? You need to have money in the market. Now, even though it's a 24-hour market and money's always flowing through, you know, we need to have decent amounts of money flowing through, right? So imagine you were single, you went to a club to meet a woman, and it's a singles night, and you turn up, you know, and there's 3 or 4 women there, and there's 50 guys there, you know, what do? You know, you're going to turn around and walk out. You don't want to stay there, do you? Unless that tickles your fancy, I don't know. But otherwise, you wouldn't want to. You get my gist where I'm coming from with this, right? So it's the same thing here as well. We don't want to go into the market when there's little bits of money. Little bits of money is like having loads of guys at the singles party, and you turn up and you've got to compete for the attention of 3 different girls, and that's all you've got. You're better off going somewhere else, you see. So it's the same sort of thing, right? So we want volatility in the market, we want movement in the market. That's why we do it at that time. So anyway, now, excuse me. Anyway, so now these 2 we can't take. We've invalidated. This we can take as the time. Then we've got this one here, yeah. So what happens here? It comes up and it hits here, yeah. You guys can see that. I make this bigger. It comes up and it hits here, yeah. Okay. So as it hits here, now you've got a trade that you can take. So all you do is you don't wait for anything. You sell it at market at that point there. And the market pushes down. You've got your 13 pips. Bang, you're in the money. Do you understand me? Let's say that, for example, you only get filled here. It comes down 8 pips or so, goes against you, but again, you're fine. Yeah. Then this one here, market pushes down, and it's the best retracement out of them all, but you don't get in. Why? Because it's not hitting the top band. Yeah. So this helps you filter out. And that's what you're looking to do, is to filter out the trades that aren't going to give you the momentum that you need. This is why we trade this specific strategy. Yeah, it's for that movement, that momentum. Now, when I was trading this at the time, this is a few years ago, but it was for volume that I was trading. So I was only looking for 5 pips. That was it, and I kept taking it all day during the volatile sessions. And you'll get, even if you trade this and you're not using any of the other money management tools, you'll still make money with it. It does work, you know. So what's the key to it then? Well, the key is strict trade management. Strict trade management is key, right? And part of being a trader is you've got to be able to get taken out 10 times at break even or for 1 pip and still go again. That perseverance, that's what makes traders different. I was talking to a few of you, spoke to this morning, and I remember having a conversation with one of you, and I'm not sure if you're in the room or not. But what was we were talking about this morning? Damn, it slipped my mind as well. It's a good point. But oh yeah, that's it. That's right. Yeah. So this is the question, right? So what is it about a trader that you notice? Right. So throw some answers my way. Yeah. What is it about a trader that you notice? Right, so while you guys are answering that, let me just click through and see if there's anything that we can take that's setting up, yeah? And I'll take it here and now with you. This one here, I'd have taken this one here because of the middle band, yeah? I know we haven't done the middle band yet, but I would have traded off the middle band. But just waiting for your answers. Answers on the postcard, send them through. What's happening here with the volatility? It's slowing down, isn't it? Yeah? Do you see that? Volatility here is good. Good. Bands start coming together. What does the price do? Yeah, it's consolidating, getting ready for breakout. Remember the question, trader, yeah? Remember. See that? That's starting to now get ready for breakout. So that one there is not going to give you the opportunity you're looking for, right? Because it's not volatile enough. There's no movement. We want to see bigger bands. We don't want to see the bands coming together. We want to see them expanding, not contracting. You understand? Um, right. So uh, tell me, what is it about a trader that you notice? If you don't know, I'm going to give you guys the answers. Yeah. All right. So the big difference about a trader, yeah, is traders are bargain hunters. They're always looking for a bargain. Yeah. So, how many of you guys here in the room have read that Market Wizards book? Just so you know, that Market Wizards book is about traders that have taken, um, taken small amounts of money, like 10, 20,000, and turned it into millions. And so, the interesting thing about Market Wizards is it's an interview. So it's like you sit down, you can ask them questions, and they're willing to speak about their trading. And it's like, how did you get into it? Okay, cool. And what was the turning point for you? And what was the key thing that you learned? And what's your biggest lesson? And so forth and stuff like that. And their biggest lessons always come from losses. That's always happens. But back to it, the trader's always looking for a bargain. So what are you looking for as a trader? And I'm not saying an FX trader. I'm not saying a commodity trader or stock trader. I'm saying a trader in general. It could be a market trader. They're always looking for a bargain because you can only profit in a bargain, right? Well, you can profit without a bargain, but you're always looking to make the most profit. So you're looking for the cheapest price. That's how you want to be thinking in that terms, yeah. And that's what these are going to give us as well. It's bargains because we're bargain hunting. Do you understand me as well? So it's like, what's the best price to buy a dollar yen at? Yeah, is it here? Or if you wait for it to come down to the bands, is it there? And if you let it come down to the bands, it's always going to be at the bands because it's always pushing down as low as it can go to get to the bottom band, and vice versa. Yeah. All right. So that's what it is about a trader. Let's keep clicking through and seeing what there is that we can take. See that? So here, that's set up there. You guys can see that set up there. Comes up, hits that, hits the top band. Now, really quick question as well. What's more important, the MFI or the Bollinger Bands? The Bollinger Bands, right? So the Bollinger Bands are the most important thing. Yeah. By themselves, you could trade it, but use the MFI to filter out your entries. Yeah, this is discipline, it's a disciplined approach. You've got to have that. Yeah, so let's have a look here. Could we take it? Yeah, we could have taken that trade. Yeah, did it go in our favour? Let's have a look. Yeah, quite comfortably it did. Let's have a look here at this one here. Bang! Look at that. So he had an entry here. It did do its thing. Yeah. But look at the entry here. Just waiting for the difference in the entry. 20 pips to the downside. It's a huge difference, yeah? Remember, we're coupling this with our money management, yeah? On how we manage out the trade when it does break as well, yeah? So if we can find some examples, I'll go through that with you. Look, this one here might be setting up dollar CAD. We need it to push up to the upper band here. We're not seeing that at the moment. Um, Euro pound, New Zealand dollar, Euro dollar, pound dollar. I think we've got here again. So at the moment, there's nothing setting up at the moment. So let's just flick through and see what the other time frames are offering. If there's anything. We're only looking for small moves. So if something comes up on one of the other time frames, then I'll look to take it. But we need to see if there's something there. Yeah. See, look, that's good because see how wide that is between. But it's a 1 minute time frame. That's why when you flip through the time frames, you'll find the 15-minute time frame that this here on the 5 minutes could be setting up euro yen. Yeah, do you see that? Just need it to push down to the lower band. Now I'm just going to measure something. See, 14 pips in that range. Now have a look at this. What's happening to the price? Do you see what's happening to the price? You guys see that, yeah? Alright, that's starting to contract. But I want to take a trade in front of you guys as we're recording as well, so you've got one. So let's see if this thing breaks through. If it does, we'll buy it at the. We'll get in at the lower band, yeah. Come on, baby. It could be. Let's see. So we're not sitting there watching it. I'm going to put an alert in place. Cool. Right, so we need to watch that one now. It's on the 5 minutes. Ideally, on the 15 minutes, it'd be a lot better. Do you see that? On the 15 minutes? That on the 15 minutes, that would be good. That's what we really want is on the 15 minutes. And the 15 minutes always has a wider range. Yeah. So if you guys notice anything, let me know. Look, this one here is coming down to touch, but look at the volatility on that. It's not good, is it? So we don't want that one. It's shrunken down too much. Pound yen. All right, so pound yen, we could have taken this at the middle band, but look where the MFI is, right? So I would not expect this to reject from here right away. But if it comes down to here, then I'll take it. Right, again, this is about sticking to rules. It's important. It's key. Key, we stick to rules, yeah? Pound yen 15 minutes. See what the 5 minutes is doing. Right, look, the 5 minutes is pushed down. Do you see that? So let's just take this trade in the 5 minute time frame because it's hitting my lower. You guys see that's hitting my lower, yeah? That's 20 pips. That stop loss is 20 pips, right? So take profit is 10. Okay? See that? Take profit is, you guys see that take profit is 10, yeah? So what I'll expect this to do is to pull back up and hit my take profit target, yeah? The target on this is always the middle band. So 10 pips means that we're not even looking for the whole move. So we should be okay with it. Now, remember this is used also for breakouts and it could come down to fine orders. And as we flick to a 15-minute time frame, yeah, you guys can see that. What am I doing? As we set 15-minute time frame, you guys can see that we still want that lower one, yeah. But do you remember I said to you how it reacts to the middle band, so it could still reject off of it, couldn't it? Yeah. We're not trading supply and demand, but if we do this, see that gap there? See that gap? Those gaps always act as strong levels of support and resistance, yeah. Now I'm gonna put in place a sell trade as well for 3 times the amount at 8 pips below. Okay, so I know you guys. We've done this already in coaching, one-to-one coaching and stuff, and Neil's been doing live rooms, so I've been talking to a lot of guys individually. But I wanted to record this just because it's good for you guys to have it and then watch it a few times as well. Yeah. So let's bring this back up because we've got to see what our trade is doing. At the moment, it's 1.8, so 1.8, 1.7. There's no reason at the moment for me to want to move this just yet. Yeah. So I've got to let this play out at the moment for the time being, but we'll watch it and see what it does. It's either gonna keep pushing down, or it's gonna push up to our favour. Yeah. So we'll wait for the time being. I could rush in right now. I could go to break even at this moment here. Okay. I'm not rushing to break even at this moment here just yet. There's a 2 pip spread in this. So it's only up. It's not even 2 pips now. So hopefully we get some good volatility as well. So while that's playing out, we don't need to watch it, do we? Because we can see here what's going on, yeah? So what do I really want to know? I want to know when the market either gets to the higher or lower point. It's either getting up to here. So my alert's in place. Or I want to see if it comes in and triggers my sell as well. Alert. I'm both in place, yeah? Now, if this thing fails, continues to move against me down to here, then fine. I'll still make my money. I'll still get paid in this trade. I'll still be profitable, so I don't really care. Obviously, the key thing here is I'm going in. My entries are one lot, so my account is 20k for the one lot, right? because I want to make sure I've got margin to be able to trade like this, and this is what it's all about. It's margin. So when I speak to you guys about having bigger size accounts and stuff like that and so forth, there's a reason behind it, yeah. And and the main thing is, it's like you're seeing now. So we can trade different styles and do different things and have more options without having to get in and it having to have to go in our direction straight off the bat. If it doesn't have to go in our direction straight away, then we're not going to be sitting here so concerned, or we're not going to take 2 or 3 trades that goes against us and then miss out on the third winner because the first two have hit us and now we're concerned about it as well. Do you see what I mean? Yeah. So why don't we flick through and see what else is going on before we do look at 15 minutes? So let's carry on. 5 minutes. So this one here is not setting up for anything just yet. It's clearly trending though, as you can see, on this 5 minutes. On the 15 minutes, it still needs what, another 5 pips to drop. So we could get an entry on Aussie dollar as well. It could be traded on any time frame, Roger. It doesn't matter what the time frame is. But bear in mind, if you're trading a bigger time frame, you want to have bigger stops and bigger take profits. So you want a 60-30 on a bigger time frame. Yeah, not a 10-20, but a 60-30. It depends on the time frame as well. If I went to a 1 hour time frame, for example, same setup, yeah. Market here comes up, it hits this, hits here, you sell it. That's what 17, 18 pip move. So from the 1 hour you get bigger moves than you would do. If that was the same thing that we're looking at on the 15 minutes, that wouldn't be as much as 18 pips. But in saying that, for 1 hour, you would expect a lot more movement as well. Move that out of the way. Depends on the time of day. 6 a.m. There you go. But you didn't get an entry here. So that's why, yeah, this is the 4 hour. You can do a 4 hour. You can do a daily time frame. It doesn't matter what time frame you go to. Yeah. So this one here, no, you wouldn't have got this. You would have got this one here. Yeah. And then that's 300 pip move on daily time frame, right? So you can trade in daily, hourly, 4 hourly, whatever. But we trade in 15 minutes. So why do we trade in 15 minutes? Why is the 15 minutes? Why is this important that we trade in 15 minutes? It's got to be a key question, right? I'll tell you for why. Because most people won't hold on a 4 hour, 1 hour time frame. So typically what happens is it will throw out their ability to be able to make money consistently. Their reward to risk will always be out. Typically that's what happens. Yeah, 60-30 in a 4 hour time frame. Most people can't hold it. Yeah. With the 10-20 or the 15-30, it's quicker. Yeah. And I want to be in and out quicker. Do you understand me? Yeah. So profits aren't guaranteed. Rebate is. And the reason for the rebate, I mean, it's there is a method to the madness. There's a reason why professional traders trade for rebate. So if you go sit in the city, that's what you'd be doing. Do you understand me? Yeah. So look, we might have another one setting up here on Aussie dollar. Our pound dollar is still on, so that's still trading. So if we'd have gone to break even, we'd be out. But like I say, at that point there was no need to go to break even just yet, so we leave it, we wait. Yeah. And let this play out. So hopefully we get a move in either direction so you guys can see this play out and see how it works. If the balance is on 220.061, so we let that play out. Let's go back to Aussie dollar and see what that's doing. That's getting ready. I'm putting an alert in there so I don't need to watch it. Now, if I got an alert on a different chart, I might do. I thought I had an alert come out there. So Aussie dollar we wait. Dollar Swiss, look at dollar Swiss. Dollar Swiss not quite. It needs to push up more. So this still would need to push up more than that because it needs to push up and have this would have to push up with it. Dollar CAD, see how dollar CAD's doing. Again, I want to see that push up a bit more. When it pushes out as well, it's really good. If you get pushing out, it's even better. Euro pound might set up here at the middle band, around about here. It might do.
Yeah, yeah.
New Zealand dollar is yet to set up. That's not far away. New Zealand dollar. What's that? Is that your favourite one, Roger?
Yeah, but yeah, but what type? There's no commission on there or anything. What are they charging you?
um, let's see. Euro dollar's doing on 15 minutes.
Cool. So then, what I don't get is when they send it, they're gonna put the money on your
Which one you
platform
in?
still, aren't they?
Which one?
So it's gonna leave a payment trail.
Yeah, yeah. You still in there? Are you?
That what you given me is a payment
Well,
provider which gives you to a platform, isn't it? So they've got their own platform. So when
oh,
the
okay,
guys
okay. Right. Show me.
sign
Which
up,
one? This one?
that's like straight fraud, bro.
This one, yeah. Okay,
No,
okay,
yeah,
okay. Cool. So you bought. What price did you get
when
in?
you do the thing, you want to do it so that it's in house with us. So we put the docs on, we get the account, and then you send the dough out. There's no liability. There's no connection to where the dough's gone. It's just the guys put
Double
it
eight
through the
seven nine. Is that right?
it's gone, and you've just got an empty account. Do you understand my point? You've missed. So you see, this way
Yeah.
is this
Okay.
kind of
Cool.
thing. What you're saying, we get this guy to send 100,000
Oh, so what
dollars.
did you get?
Yeah,
What do you mean? This one?
send it out, and then when the guy comes back and asks for the code, it's gonna get flamed.
Yeah, it must have been this one. Yeah. Okay. Okay. All right. Cool. So you're looking for to drop down to no, you're looking for it to drop down to either around about where would you be looking for? You're looking for 0.87706, yeah, or you're looking for 0.88067. Oh four six. Okay, cool, cool. All right, cool. Yeah. So that there, it. Let's see how it reacts at the middle band. It might reject at the middle band, but it could just push through it as well. So you will notice a lot of times it will just push through the middle band. It's not that it doesn't react to it, but um, we'll see how that pushes through. So we can check back on that one there. Cable, what's cable doing? Cable still waiting for cable to play out. Come on, cable. See, it might still come to the lower band. If it does, then I'll be set up to take a buy in the middle on the lower band. It will close out these trades and it will give me another opportunity again. So hopefully we can see that and you guys can see it play out. Um, is the rebate activated when you place the trade to break even? What about if your trade goes straight to target? Would you qualify for a rebate? Yeah, the trade doesn't have to win or lose to qualify for a rebate, Patrick. So Patrick's asking, does it have to do this? Does it have to do that? So the way it works is as soon as, yeah. Did you hear that alert, by the way? So that was my alert saying to me, like, look, get ready because it's about to trigger your sell trade. Yeah. So do you hear that? Do you guys hear that as well? Or was it just me? No? Yeah, you hear that, yeah? Okay, cool. It's not just the voices in my head then. So as soon as you open the trade, and then as soon as you open it, and then the moment you close it, rebate's activated. That's how it works. It's actually activated from when you open it, because that's why the rebate. That's why I don't know if you guys on any of the stuff we would have sent you. There's always a word in round turn. Yeah, so round turn means open and close. Yeah. So as soon as you place the trade, the moment it closes, your rebate is earned. That's the way that it works. So we're doing a bit of a waiting here. If you've noticed when I refer to the markets and I always say she, have you noticed that? Anyone notice that? Say let's see if she goes. Do you ever wonder why I say that? And the reason why I say that is because it's all guys in this room. If anybody else watches this, I'm not being sexist, but you do always have to wait on a woman, don't you? You know, it took your head, yeah. All right, hasn't triggered mine yet. Like your motor. I didn't say that bit about the motor. um, right, so just a bit of watching, a bit of screen time. And this is what you do. This is what trading's about. A lot of it is about watching. Once you're in the market, it's like, what are you going to do? Do you see what I mean? So that's why I put the. Do you know why I put the alerts in? Just so you know, the reason why I put these alerts in is just so I can do other stuff. Look, that alert's disappeared for some reason. Because it allows you to do other things, yeah. So now it's got to cut through for me to get alerted. Um, so I can do other things now. I can go online and look at things and all kinds of stuff and things like that. But also we can flick through and see what else is going on. Bang, that's been triggered. I need to know that's been triggered. That's important to know. Euro yen. Um, what's that? 15 minutes. Why did I mark that? 5 minutes. So I marked here. Let's go back to that pound dollar trade because that's triggered now. Now that's triggered. Who asked me about this the other day? Was it Patrick Mumba? So see, if one person asked me something, then at 9:30 p.m. came out a bit better than expected, Patrick. Um, so do you know you can't place an order on top of an order? I can't right click and place an order on top of an order. So what I do is just here buy stop, watch, drag it down now. I drag it, you see the take profit and stops move with it. So now I do that, move it so it's on top, and bang, it's in the right place. See that? So this here could be more so looking to come down to find the lower band and also the level here. Yeah. So if I put this in, and then that would add up quite nicely. That would correlate quite nicely is what I'm looking for here. So let's move that out of the way. Let's flick through, see if there's something else that we can play with. Look at that! Look at that! When we was waiting for that, oh, didn't quite get it. It never quite, it never quite gave me my thing. But you see, that's what happens typically when it pulls back and it rejects. It typically pulls back to reject what's happening. This one here, actually, we could have taken this one here, but it would have been a bit trigger happy to do it as well. You see. But again, that's what it does, is it pushes up to hit the top band and bottom band. Typically, you get rejection, yeah, which is exactly what you're looking for, is a rejection. Look at that one there. Oh, see, I could sell this right now. I could sell this straight down. I've got enough movement in it to sell, but I don't want to start playing out a few trades in the room. So I did that on one, and I did 5 trades at the same time, yeah, on the breakout. And I had a few people say, "Oh, I was a bit confused because of how many you had gone at the same time." That's why I'm trying to keep to this here. So we just do the one, and that's it. Yeah, you see. While we're doing it, we just do the one. And also now, what do I want to know? I want to know if this thing breaks through. So I put this here, my alert. Yeah, so for that to break through and take my upper order, I need to know, don't I? I need to be aware of that. So we'll do a bit of screen watching together. Any questions? Any questions? There's normally questions. It's always good to ask them in the room, because then I'll answer them on yeah. 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 Good. 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 So you're managing, if you like, you're managing the overall margin and risk on the account as well. So you're taking that into consideration, which is important as well. Yeah. I can't hear you properly. Sorry. Sorry, say that again. You're breaking up a little bit. Sorry, Ference. Yeah. Exactly. Yes. To release some margin. Yeah, exactly. That's why when I say to you guys, I say like don't go crazy, just take it easy. Yeah, because it works, it makes money. You're growing accounts when you stick to the rules. The only time that you're not is when you then start going get a bit overexcited and stuff like that. So it's important to stick to these things, all these rules that you have in place that we give you. Not many. They're not a massive amount of rules, but they're key, aren't they? They're important. They're key rules as they're key as to that's greed is the biggest thing. People get greedy, yeah. So and they don't want to miss out, they want to lose out on trades and stuff like that. And we've all done it. This doesn't pertain to any specific character. Yeah, so you guys understand. Don't ever sit there like, oh, that was me. I've got to get this right. Why did I do it and so forth? You do something that everybody does when you do that. When you become greedy like that, we all want a bit more and a bit extra. Yeah. Um, and even when we have more, we want more. That is just the way of human nature, right? So if all you're getting is 5 pips in every trade, at some point you're going to start scaling that up and think I could take 8, and I could take 10, and I could take 12, and I could take 20, and so forth. Or you've got a trade running in your favour and it's running 50 and it's up 47 pips, but you want that whole round number of 50. And, I want it to go 50. I want it to go 50. I'm going to hold it for 50, right? And you can do that. It's fine. The question isn't whether you're doing it, but why you're doing it. So why are you doing it? And sometimes you've got to look at it and say like, well, because most people trade to be right, and that's what it is. They want to be right. I don't know if you guys have heard of this, right? So I've got a bit of time to talk about a bit about psychology. I know we do this when we do coaching sessions. We go into psychology as well because it's a key thing. And those of you that talk to me, and I know Roger will pipe up about my analogies and stuff. But the reason why I give you all these analogies, and I know you love them, Roger, is because of of it hitting the message hitting home. But you can understand something better when it's put to you in many different ways. The same message to hone it to home it in. That's what you're looking to do is home the message through, isn't it? Yeah. And that's what we're constantly looking to do with all these analogies. So that's what it's about. So the greed side of things is just normal human behavior. That's what it is. None of you guys are yogis, as far as I know. You're not You're not yogis. You don't sit there meditating all day trying to stay between the two middle pillars, um, you know, of the cabal and stuff like that, and keeping your emotions in check so you're not too right brain or too left brain and things like that. None of you guys are doing that, so you're going to suffer all these kinds of emotions. And the guys that are doing that type of stuff, the yogi guys that are doing that kind of stuff to control the emotions, they're not trading the financial markets anyway. They're doing something different. They're trying to attain some kind of like enlightenment. Yeah. But so therefore, in the Western world where we deal, and in the capital world where it's about money, making money, and having riches, and getting the best, this and that, and having trophy wives and all these kind of things, um, it's a different world. It is based on emotions, and then there's the food that you eat, and then that attacks your emotions also, right? And you'll notice that as well. Um, so these things all have an effect. Do you see what I mean? So these are normal things that we all go through, right? So part of the whole sticking to the rule side of things and being disciplined with it is so it does get your emotions in check in order, right? Because that's what it is. What happens? You win a trade, you make money, you feel good. You lose a trade, you lose money, you feel bad, right? Or you sit in the trade and you sit in the trade and you get in, and it moves up in your favor, and it's up like 25 pips in your favor, and you're winning, and it's like you're feeling good. You walk away from your screen, you come back, and it's come down, it stopped you at a break even, right where you got in, and bang, that's horrible as well. And it's like, you almost want to start cussing a little bit because it's like, and you want to scream and shout a little bit or whatever it is, or take it out on someone because you think, you know, I had 25 pips on the table. If you're in at one lot, that's 250 quid. You're like, I had 250 quid. I should have taken it. I should have taken it. You can't go back. That's what it is. You can't go back. You can only go in one direction, which is forward. So you just keep going in the same direction that you're going, right? Which is forward. We can't go back and change anything. But going forward, we can take the lesson from behind us and bring it in to the now. Yeah. So And we've all done it. This is the thing. So you guys aren't going to do anything that I haven't done, that Neil hasn't done, or any other guys haven't done. We've all done it. We've all been there. It's the same battle for everybody. Yeah, the same emotional battle for everybody. It's a battle between your right and left brain, because one is creative and the other one's logical. And do you need to trade a high amount of pips? Why just compound instead? Um, no, it's not about. You're talking about the 25 pip move and stuff like that. You don't have to, but the point is just about the emotions that come with it. Yeah, it's the exact same thing. It's the emotions that come with it. So you start overthinking things. But if you stick to your rules, you'll be fine. Just stick to your rules. Just stick to your rules. Just stick to your rules. Trade one pair at a time, for example, or like Ferenc is saying, he'll trade two pairs at a time, but that's the maximum. He won't go more than that. He won't get into another trade, no matter how good the setup is, until at least one of them's closed out, and so forth. Yeah. So, and sometimes you can be sitting there, and you can get bored. As human beings, we can get bored, right? So what do? You might go on the internet. Some of you go on Facebook. I don't know. Some of you guys might go on, start looking at adult sites and or humor sites, just silly things just to kind of like distract you wherever it is. Um, and we can get caught up in things like that. That's nothing wrong with that. Do you see what I mean? Um, I at the same time, there's sometimes when I'm sitting there in a trade and I'll go off and I'll look at something else. I might go and watch a YouTube video or something, but I have my alerts in place, letting me know what's going on. Do you understand me? So, Virendir must be downstairs.
Yeah, so let's go
Do you see what I mean? Yeah.
Yeah, what's going on?
So, just waiting for this trade to play out.
23.69.
I'm hoping this plays out before the live room closes, because I want you guys to see this
Yeah?
play out. Do you see what I mean? Because why? Why do I want to see it play out? I want you guys to see how I trade it, how I manage to trade and stuff like that. I'm on a 15-minute time frame, 5-minute time frame. So don't typically get as big a moves as the 15 minutes. You guys know I like to stick to the 15 minutes just because the moves are bigger. But I was hoping with the 5 minutes we'll see some movement a bit quicker than what we're seeing. Market should break out at 1 o'clock, which will give us some opportunities as well. Some movement there. Let me just do this. New York. It's well within the range. Well within the range. Let's go to 15 minutes. Look at this range here. 32 pip range. Well within. No, no, no. Well, no, no. Well, no. US is opens at 2:30, but you always get pre-market trading the same way that the UK opens at 8 o'clock. But you still 2 hours beforehand the market's trading. That's when they start moving, isn't it? Yeah. And it's the same thing with this as well. It's the exact same thing. Um, with with the New York session. So like the London Open, the break. See how we're taking the break 2 hours before the market opens, or an hour and a half before the market opens, because you get that movement, that volatility. You see, make sense?
Yeah.
Yeah, cool, cool, cool. So, let's see what this market's doing. Do you guys prefer candles? I know quite a few of you have said you prefer candles. You like it better, candles, is it? Candlesticks. Okay, so it's 5 minutes to 1 o'clock. So we'll run over a little bit. I don't know what you guys fixed for time. And hopefully we get this thing close out so you guys can see the P&L and how it all plays out as well.
You busy? It's Neil from Bovarius. Just to get the invoice back, 78 lots. I'll get the payment taken.
Um,
That was all. Yeah?
Alright, so ADP, a
I'll
quarter
just
past
pay it,
one,
yeah? Okay.
ADP,
Okay.
non-farm payroll
I'll
change.
just
Do you
pay it.
guys know what ADP is?
Thank you. Bye.
It's a precursor to NFP, yeah. So it gives you an idea of what NFP is going to be like, yeah. So let's do this while waiting for that trade to play out. we've got in place. Yeah, we've got our alerts in place. So, all right. So this is ADP. Yeah, and if you click here, it's good to know what these are. Some of these is really good to know. So we'll get movement in a little while.
Come in, come in, come in.
Um,
What's going on?
estimated change,
You know, what's with you,
as
man?
you can see here.
How are you?
Cats and dogs.
Cats and dogs.
As you can see here, it's
Raining.
raining cats and dogs. So you guys can see here, yeah. So this is the same information that you get for NFP, but it's a precursor to.
Yo, how's your back, man?
Back is fine, but
It's a precursor to. So
since Saturday, I've had a headache. I can't get rid of it. I've
Yeah.
got a neurologist appointment at 7.
Is it?
Yeah.
What is it? Headaches in
all
either
right.
hand or
So
what? That's what happened to me, man.
Here.
Yeah.
what else we
Got so
got?
many drugs.
Crude oil inventories. We'll see some movements off the back of crude oil inventories as well.
Yeah, that's what
Um,
happened to me, but they're telling me.
FOMC statement at 7 p.m. tonight. So that's what we should see some movement tonight off FOMC
Yeah.
as well. So that should be quite good, right? So if you guys are trading at that time, US dollar, you're going to get movement out of the US dollar. It's a good time to trade if you're trading. If you're trading this, we still got to wait for this thing to play out.
Is it?
Yeah, I'm supposed to go I leave for tomorrow.
You get it?
So
All out.
Silly, bro. I'm gonna be on drugs.
don't need
I can't.
don't need a big move. So
How high is the blood pressure?
I don't know. I don't know. She just said your blood pressure's high.
if you guys were fund managers, this is what you'd be doing.
Yeah, I'll get told that all the time, bro.
You wouldn't even place so many trades. You'd be sitting there watching a lot of it. A mate of mine, he runs a quant fund,
I'm 100.
and he has millions under management
I need to get
from investors, and he doesn't do anything. I mean, not say he doesn't do anything. He does do things, but he doesn't do anything in the sense of trading wise. A lot of it he sits there and watches it,
Yeah,
you know. But the information that he has is amazing,
In scripted right now,
amazing.
it's in the sort
so why am I fucking paying money for
You
that?
know, so
because that's because it's not that paying the money for me to trade
so
it, but the way you
let's
want to
see.
work is go stealth, innit?
Yeah,
That's what I'm trying to get it so we can just give it to everybody.
yeah.
But it's the script, you have to go into the
Need
script and trade
another
it yourself. That's what fucking loses your eyes, bro.
little
Trying to go
push.
through it all. Yeah,
But this is what it's like being a trader. You guys will see that. That's what it's like.
Can I move Paul's stuff?
yeah. Let's do it, man.
Yeah, go for it, mate.
Another Paul's got me like a hat. Yeah. Know that.
How you doing, mate?
Can I go get us some coffees, then?
I would love a coffee.
Yeah. Paul, what would you want, man?
No, I just finished one. That's gonna be too much coffee.
Alright, do you want it, yeah?
I need.
No, I'm good. I'm good. I'm good. I've got water.
What do you
Thanks.
want? Filter, yeah?
All right, so
Yeah, hot, black or white?
we're just waiting a bit, right, guys?
White, yeah?
Any questions, by all means, ask them. It's good to see these things play out. Yeah, no, I just finished one. It's gonna be too much coffee for me.
Smart, bro.
Oh,
Close, innit?
I'll be wired. These guys are trying to get me wired with coffee.
I'm gonna wire
I'm
it.
not. If you guys know me, you know I'm not a big alcohol drinker. I don't really like alcohol. But if anybody comes round, typically, you know, my thing's going to be like when you guys come to visit and stuff. I'll be like, you know, we'll grab a coffee. Where some people like let's grab a pint or a whiskey or something. I'm more of a coffee man, but it's only a certain amount of coffee I want to be drinking in the day as well. So I've got a water next to me. It's on there. It's on the modem. All right, so we're getting some movement. Here we go. It would be a buy on a New York Open, would it? So I'm hearing that it would be a buy on a New York Open. It probably would. Let's have a look. But remember, I'll buy and sell it on the New York Open. I'll take either side. I don't have a bias. I don't care. And actually, it'd be a sell, really, wouldn't it, Patrick? Because look at this. Yeah. So if you look on the 15 minutes, you can see what that's doing. Yeah, it's pushing down. So I would be looking to sell that on the open. I'd be looking to take the break to the downside, and also I'd be looking to go to a 1 hour time frame, and still it's down, 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 down. So I would still be expecting a sell off on this. You see, it is the trend has been down quite strongly as well. Dollar's been pushing up and climbing. So uh, what about it? What about it, Patrick? You're asking about the you're asking about this, right? The this indicator, yeah. What does that show? Well, at the moment on pound dollar, if we go to 15 minutes, it's not set up. It's not set up. We took it in 5 minutes, yeah. We didn't take it on the 15 minutes. On the 15 minutes, you've missed it. Have a look here. It's come out now. It's out of the MFI. But in relation to Patrick's question, so Patrick's asking me, right, what about the MFI? And we were just looking at the US Open, right? And he's asked about the MFI. So this it's a good thing that you asked that, because if you're trading the US Open, then you're not trading the Bollinger Band strategy. You're trading one or the other. Yeah, because they're different entry criterias. Do you understand me? Breakouts are always with the trend. When we're using Bollingers, we're trading the average. We're trading the reversion of the mean. We're trading back to the average. So it's a different strategy, different entry, different criterias. Yeah, but the management would be exactly the same. You with me? Cool. You understand? Just kidding. All right, cool. So you got that, yeah? So here we go. Not much longer to go now. Hopefully, we get just to move in one direction or another. So you will see how all we need is volatility. I know it wasn't an ideal setup because we weren't using the 15 minutes like we'd like to. That's we always want to take it in 15 minutes. Took it off the 5 instead, but either way it's cool. Either way it's cool. Let's remove this as well. Don't need that in there. It's unnecessary for the moment. Bit of a waiting game, isn't it? Bit of a waiting game. Not much longer to wait now. What are we waiting for? Another 5 pips. Yeah. So it's 15 minutes to the ADP comes out. So that may be the catalyst that we need. How you guys fix for time? Or is anybody getting really bored just watching it? I don't mind if you guys are getting bored. I don't get bored watching these things. Beats digging holes. So I know sometimes you got to sit there and you got to sort of babysit the trade a little bit, but it beats digging holes, and manual labour and stuff like that. Jay's good for time. Cool, cool, cool. So, because if this thing plays out, you guys can see the results and you can see exactly how it happened. Do you see what I mean? But I want you guys to bear in mind that I always take a disciplined approach anyway, regardless. So yeah, sometimes I don't wait for it to hit the upper or lower band, but you remember a lot of times I don't want anything on my chart neither. So you guys will know from previous, I like to have just a plain chart like this. Yeah. Yes, best time to trade it. Yeah, definitely. Yeah, definitely. Yeah, best time to trade it. Um, right, so this is hit now. Thanks for your patience for watching. This is hit, and we just this I switched across a different chart. But you guys saw that, yeah? So now, do you see I have to close that trade? Yeah, because now I don't want that trade to trigger because that was part of the original money management setup that I had. You guys with that, yeah? Makes sense? Everybody? Cool. So if you want to see how it played out now, this will show you so you can see. Right, so we took ignore this one here, right? Because this was the first I took this. This is before live room, yeah. So the one that you saw in the live room was here. Do you remember I took that trade? Was the first one was a buy, wasn't it? Yeah. So buy trade as it started to fail, I then took the sell, yeah. And then it started to rally. I took the buy, and then just in case, I put the sell in place. Didn't need it. Took my buy. It went up, and what it done is it cancelled out my loss on the other side. So all I did was protected my account, and then obviously I took my profit out of here. As you can see, in terms of volume, right? So that's 73 on the P&L, right? 73 quid. and then also there's what 1, 4, 10, and then also there's also 10 lots. So 10 lots is also $50. Yeah. Do you see that? Makes sense. That what that does is it allows you to get the growth out of the account, leave that in there, and let the account keep growing. The rebate's going to be paid to you. We're never going to put the rebate in your trading account. That's not what we have access to. We don't have access to your trading accounts, and it's not trading credit. It's actual cash earned. So that will then go into your bank account. You do that a few times a day, and you see how you start building up and earning. Yeah, makes sense. Cool. So we've run over just a little bit. And what I'm going to do is I'm going to end the live room here now. Send you guys out the recording. Let me get it uploaded to Facebook, to YouTube, and then by all means, again, same thing again. Any questions? By all means, give me a shout. I know some of you guys are going to be trading the ADP, and some of you want to trade the US Open with the ADP coming out, which should give a good boost to it. Any questions or anything? Give me a shout. Otherwise, thanks for being here, guys. Really appreciate it. I'll get everything sent out to you guys. If you need things like templates and so forth and stuff like that, obviously, by all means, let me know, yeah? Alright, cool. Thanks a lot, everybody. And I'll speak to you soon.